Hello, everyone. Thank you for attending our home virtual session, helping people understand how to navigate the home buying process. Um, the reason we put this together, myself, Watson Mortgage, and Ellie Yarckin with Neal Development, is to help people understand the process a little bit better. Some people have lots of questions. Where do I find a home? Do I qualify for a home? What should I look for when buying a home? And that's what we're here, hopefully, to answer some of those questions. And whatever other questions can't be answered this time, we'll definitely encourage you to give us a call and we can answer some more questions that way. Having said that, let's go ahead and get started. I'm going to share my screen quickly. So home buying, it can seem daunting, particularly someone who's never bought a home before. They can think, oh, I can't afford to buy a home. Oh, my credit's not great. Oh, what about the repairs related to a home? There's so many things that can scare people away from buying a home. And the reality is, once you understand the process, it doesn't, the scary part goes away. So what do we need to get started? Uh, there are five real questions you need to ask. Who do I need to help me with the home buying process? What do I need and why? What kind of home are you looking for? What should I pay? How should I pay? And often those are the two big ones, is how am I going to finance this? And then also, what am I buying? Because it's important not just to say, I love a home, but make sure that home really makes sense for you. So when we talk about who do I need, I would say top of the list, and this is probably a plug for myself, you need a realtor. The realtor is basically going to act like a project manager for you and help you with the other parts of the home buying process. They're the ones that have connections, they have the experience, they have the knowledge to help you walk through the rest of the process. The other pieces are important, but they're not going to act as a project manager for the entire process. They will act as project managers for their respective process. Next, you need a mortgage loan originator, an appraiser who's going to tell you what the value of the house is. A surveyor will tell you how much physical property you have and make sure that the boundaries are clear. And then the inspector is going to make sure that, well, they're going to inspect the home. So they're going to check the various systems. They're going to check the roof, electrical, water, look inside the house, look outside the house, and make sure that it's a house that either is worth buying, or if there's repairs, that it's clear what repairs are needed. So let's go back to what do I need and why. Buying a home is a very personal thing. So you as a home buyer need to understand, what is it that you want? Because sometimes we watch HGTV and we see these beautiful homes, but we don't realize what the price tag is for those beautiful homes. And then we see other homes that maybe are in a price range and we're like, but we have to set some realistic expectations of what it is that you need in a home and why you need it. So first thing I would say is, what do you love about your current home or your rental? What are the things that attracted you to that rental to begin with, or to your home? And what is it that you still love about that home? Obviously, if you're looking for another home, there's something that doesn't fit anymore. But start off with what is it that you like, because then you at least have a baseline for when I look at other houses, at minimum, I want this. But then you also look at it from a perspective of what no longer fits my lifestyle. Maybe you were single when you got the home or the apartment, now you're having kids. Maybe the opposite is true. You bought a home when you were young and with kids, and now you're an empty nester. Maybe you have to relocate. All of these are questions that you need to think about, so that way when you pick the new home, it's a home that's going to fit your lifestyle, fit your current situation, and fit your needs. Ask yourself, how do I live in my current home? Is it just a place for me to go to sleep, or do I like to have family over and entertain? With COVID-19, is my home now my office? Is my home now my fitness center because I can't go out and exercise like I normally would do? Then also ask yourself, what do I want in my new home? Because it's not just about four walls. This is a place you're going to live in for many, many years. What is it that you want to wake up every morning and say, I love that I have that, or I love that I have this screened-in porch. I love that I have this bonus room that I can use for my art room, my office, my gym. Also, where do you want to live, or where do you need to live? It may be that you're working remotely now because of COVID, and you said, I wanted to live with family in Arizona. Let's just say for argument's sake. Or I always wanted to live on the Panhandle or live on the Gulf. Some people with remote work situations have the opportunity to do that. They can move to where they want because they can work from anywhere. Other people need to relocate. They don't have the comfort or the ability to work from home. And it's more of a situation, do I need to move to Jacksonville, move to Tampa, move to Orlando or Miami? And if you need to move to those areas, you're going to be working in those areas. And where is the home that makes the most sense for me that's in those areas? And then finally, why do you want it? Because a lot of times we get these ideas from shows, from friends, that we need to move. And the worst thing you could do is move simply because other people tell you it's the right thing to do. You need to understand your situation. If you have a spouse, you need to talk to them and make sure that you're both on the same page as far as where you want to move, why you want to move, and what do you need. Now let's talk about how should I pay? And I think this is the part that scares a lot of people. What should I pay? Because you look at a house and you're like, oh, this is a nice house. It has the number of rooms I need. I could see myself living here. But they're asking $350,000, let's just say for argument's sake. And you're like, well, that's kind of high, but you're not sure what the right price is. That's where a realtor would come in. They'll do a price analysis. They'll help you with preparing an offer that's competitive and even preparing counter offers in case your initial offer isn't accepted. The reality is this isn't like going to Walmart and buying a TV. These are big ticket items and there could be some back and forth. You could say, okay, I know you're asking for $350. I'm willing to offer $320. And then the owner says, no, I can't do $320, but I could do $340. And it could go back and forth until you get to the price that you both agree on. But having said that, you want to make sure that the realtor is doing a market analysis so that you don't overpay for the house. Or if it turns out you love the house so much you're willing to overpay, you at least understand what you're doing. Then once the offer is accepted, you now have a sales contract between you two. And now you start going through the rest of the process to purchase the home. How do I pay for it? There's a couple of different ways. You can pay for it through savings. And savings could be the money in your bank accounts. It could be money that you withdraw from a retirement account. Definitely talk to a tax advisor on that. I am not a tax expert. There are some opportunities there, but there also are rules behind it. So please talk to a tax expert on that. Then obviously there's home loans, and there's home loans of different flavors. When Melanie Thomas speaks, she can get into more details on that. And then what am I buying? Is the price that I offered the actual value of the home? That's where an appraiser would come in. They'll do an inspection and give you an estimate what the value is. Just want to clarify is an appraiser is different. An appraisal is different than a market analysis. Market analysis, a realtor can do, and they can do based on the information they have available to them as basically a good estimate of what the market value is. But at the end of the day, the appraisal is what sets the price. And realtors can't do that. You have to go to a licensed appraiser in order for them to do the appraisal. The appraisal is important because that's going to drive what the mortgage company will finance the deal for if you're using a mortgage company. If you're buying it cash, then the appraisal may just be a good sanity check as to what you're offering for that home. The condition, is it in move-in? Is it in move-in condition? Is the electrical functioning? The air conditioning, the water systems, the plumbing, water heaters, a variety of things that should be working at home. That's what the inspector is for. They're gonna make sure that either the house is ready to move in, or if it's not, they're going to detail what are the things that need to be repaired in order to get it move-in ready. Ownership. You want to know what's your fence lines? What is the borders of your property and where you can build, so that you don't accidentally build a shed in the back and it's crossing over into somebody else's property, or vice versa. Maybe someone built a shed or built a fence, and then the fence is now inside of your property. Those are things we need to understand. And it's talking more about boundaries. Ownership is talking about who actually has an interest in the home. And it's not just the prior owner. It could be the mortgage company, because their mortgage company, because it has a loan. Possibly they have a second loan. If repairs were done by a contractor and they were not paid, they could have a lien on the home. They could be unpaid taxes, just a variety of things. And you want to have a good title search done. You got to work with a good title company to make sure that when it comes to purchasing the property and closing on the deal, it's clear everybody that needs to get paid in order for the deal to go through. And what's the goal? The goal is to become a homeowner. Some people, they just don't want to pay rent anymore, which reality is rent is paying somebody else's mortgage plus their profit. They want to have their own set of keys. They want to be able to walk into this house and paint it the way they like, remodel it the way they like, live in the home the way they like, versus in an apartment, you have requirements as to maybe it's only certain paints, maybe you can't repaint, you can't knock down a wall in an apartment. You have to basically leave it the way it is. And then moving in, making the house your own, bringing in your favorite furniture, bringing in your kitchen utensils so you can start cooking and wowing everybody with your recipes. Buying a home is about basically making it your own, but also making it a place where you can entertain and you can have friends over and you can make good memories. So having said that, now I'm going to turn it over to Melanie, and she's going to tell us about mortgages.
I'm going to be going over a lot of information, but we're going to skim through a lot of it, but just to let you know that when you do come to us, to Watson Mortgage to get your loan, we will walk you through it step by step, between Jose as your realtor and myself as a loan originator. We will walk with you hand in hand to get through the process. So it can seem a little overwhelming, but it actually is not. It's a lot easier to buy a home than what a lot of people think. So let me share my screen. Okay, can you see that?
Yep.
All right, so again, Jose and I work together as a team to get this done for you. We're both available pretty much 7 days a week, anytime you need us. And so there's our contact information there. But let's go over what some of the advantages of home buying are. And this, of course, goes, kind of reiterates some of the stuff that Jose said as well. But there are many advantages of home buying versus renting a property. And so first thing, building equity from day one. So most people build their personal wealth from real estate. And, with the first home, you get in it, you live in it for a few years, it's going to gain in equity. You can turn around and sell it and buy another home. So you're building your own equity from day one and building your own personal wealth in real estate. Right now, we've got historically low mortgage rates, phenomenal. I've been in this business a long time, and I will tell you, they've never been this low, ever. It's amazing. Pride in home ownership. Obviously, your home, it's your sanctuary. Everyone's home is their sanctuary. And, you have pride in home ownership. Community as well. Getting into a community, having kids in the neighborhood that your kids play with, that kind of thing, getting to know your neighbors, just pride in, having your own home and not having to worry about renting. And, there's a lot of people that will call me and say, hey, I'm having to find a place to live because my landlord's selling my home. That won't happen when you own your own home. Stability, fixed mortgage payments. Again, landlord's not going to raise your mortgage payment on you because there isn't one. You're going to pay the same amount every month and not have to worry about rent payments that can rise. No landlord, freedom to customize your own space, privacy and security, giving you a sense of place and of belonging. So the loan approval process, this is just kind of a general overview. We'll go through each one of these steps, but step one is loan pre-qualification. That's what I can help you with. To get pre-qualified, it's just verbal information, enough so that we can take a look at your credit and measure out your debt to income ratio. More to come on that, but that is the first step there, is getting you pre-qualified. So let's go down and talk about each one. Step one, pre-qualification, like I said, and it just takes a simple phone call, or we even have an online application that you can fill out as well. Step two is where you provide the documentation that supports everything that you just verbally provided to get that pre-qualification done. Paycheck stubs, tax returns, bank statements, those kind of things. Step three, this is the fun part, house hunting and making an offer. So once you have turned in your documents and your loan officer, has a good idea of where you stand, they can help narrow it down to what price range you should be shopping in to yield the payment that you're looking for. So you can go out with confidence. Step three, house hunting and making an offer, knowing, what your numbers are going to be and what to expect as far as the financing goes. After you have found a home and placed an offer, the next step is the actual loan application. And so once you're under contract, we will complete a formal application at that time. This is the documentation that will go to the underwriter for your approval. Once we get the loan application signed, we move on to the next step, which is processing. This is where we hand it off basically to the loan processor, who then preps the file and just kind of gives it a second set of eyes for a review to make sure that we have everything in there that will allow the underwriter to make that loan decision. At that time, it will be submitted to underwriting there in step 6. They're going to go over the application and ensure that it meets all the guidelines. And during this step as well, that's where they will ask for any additional conditions that might be needed. Maybe the underwriter wants a letter of explanation for something in the file. At this point, we're just clearing any conditions that need to be met to make this a complete loan file. And then after we get all of that cleared, get your appraisal and everything back in, then it is time for the closing. And in the closing, basically you're signing all of the loan documents, the finalized loan documents that we have gone over throughout the process. But at this point, everything's been verified, been confirmed. And this is your signing, that you can commit to making that payment. And at that time, you will send over any funds needed for closing, and you get your keys. So that's the day of celebration, closing day. Now, mortgage programs. We do have lots of different mortgage programs to offer. We pretty much have the whole gamut of programs. Just quickly there, conventional loan, 5% down. We actually can do 3% down if you're a first-time home buyer. Conventional loans cater a little bit more to higher credit scores. Very good loan. We also have an FHA loan, 3.5% down for that. You can get a little bit higher in seller concessions, which is where the seller contributes to pay some of your closing costs. with an FHA loan. We also have the VA loan for our veterans out there. It's 100% financing with the VA, no down payment required. Very good loan for our veterans. Next, USDA loan. This one is 100% financing. Now with the USDA loan, you don't have to be a first-time home buyer, but you cannot have ownership in a primary property and use the USDA loan. So, you know, while it's not required to be a first-time home buyer, it is to help people get primary housing. So that's a good loan product as well. And then of course we have the jumbo loans for someone who's looking in a little bit higher price range. My job as a loan officer is to take the information that you provide to me and funnel down and review these loans against your scenario to see which one is going to be the best fit. If you have a scenario that fits more than one of these, then we can do a side-by-side comparison to see what works for you. But these are the basic mortgage programs that are available out there through most all lenders. Required documents, just the basics, not going to go over this in too much detail, but driver's license, pay stubs, W-2s, tax returns. We obviously have to verify the income and bank statements to show that you have the assets or funds needed to close. Do's and don'ts during the mortgage process. This is probably one of the most important slides. So we'll go over this real quick on the do side. Do understand your credit. And again, that will be one of the first things that we do with a pre-qualification is to pull your credit. And so you want to know and understand what kind of drives your credit. There's a ton of information out there online. Some of the websites, myfico.com is a good one. That can help you to kind of understand your credit. And that, again, that's the building block and where it all starts. Do start a savings plan. Start sticking money back a little bit at a time. Even if we, get you assistance for your down payment, it's always good show to an underwriter if you have the ability or show the ability that you can save. Keep good financial records because obviously we're going to need these documents. So make sure you either have access to them online or stick them back and start saving them. Do continue, obviously, making your mortgage or rent payments. Don't want any late payments showing up. Do stay current on all of your existing accounts. Do keep working at your current employer. We, believe it or not, have had people change employers right in the middle of the process. That's a big no-no because obviously we're qualifying you based on the employer and the pay that you provided to us when we first did the pre-qualification. And then, of course, keep your loan originator updated on any major changes. Over here on the right, don't change.
Melanie?
Yes.
Hey, Melanie, real quick, I'm sorry to interrupt. Jessica has a question.
Okay.
What kind of programs have financial assistance to pay closing costs prepaid? That's coming up, Jessica. We do cover that in just a few minutes, or unless you need to go.
Oh, no, go ahead. Yeah, you can go ahead with the presentation. I'm sorry.
No,
yeah.
you're fine. Ask away. We want you to ask questions, but
great.
we do cover it, so it's coming up.
Yeah,
Okay.
That is a great question.
Thank you.
Don't make any major purchases, and these are all do's and don'ts during the mortgage process. So this is after you've gotten everything started. Don't go out in anticipation of buying your new home and open up a rooms to go account that now creates another payment. Basically, you just want to freeze as far as credit is concerned over those average 30-day process. So again, there's some do's and don'ts there, and I'm sure that we can share some of these slides with you. 4 key components of getting a loan: income, debt ratio, assets, and credit. So again, those are the main things that we look at in order to determine if you would be a good candidate to get approval for a loan. So let's talk a little bit about those. With income, we want to see a 2-year history. Does not have to be with the same employer necessarily, but we have to have at least a 2-year work history. No unexplainable gaps in there. So we want to see, we're looking for stability, consistency, that kind of thing. Consistent or upward income. If we see a decrease in income from year to year, that could cause a little bit of concern. Ideally, you're working within the same industry. Again, it goes back to the stability thing. And then, people that are commissioned, self-employed, that kind of thing, they're looked at a little bit differently. And so that's where, providing the documents to the loan originator will help to determine what your qualifying income is. Debt ratio. This is the big one here that usually can make or break a file, but it also determines what price range that you would be able to shop in. So what the debt ratio is, and we'll go over it here in just a second, but it's your monthly debt payments divided by your gross monthly income. That gives us what the debt ratio is. And each program has a certain allowable amount for the debt ratio, and it does differ from program to program. So let's take a look here. So in the monthly debt payments, and this is what a lot of people miss out on, it does include the new proposed mortgage payment. So if you are, you add together all of the debts that you currently have, but you also have to add in that mortgage payment. So this person has proposed mortgage payment, car payment, personal loan payments. All of these add up to $2325 divided by gross monthly income. So this is before any taxes or anything are taken out. $7,000, let's say in this example, that would put their debt ratio at 33%. Typically, we want debt ratio to be anywhere from no more than 41 to probably 50%, again, depending on the program that we are using. So that's one of the first things that we'll look at with your pre-qualification. Assets, liquid assets, money in the bank that's available. We count those not only as down payment, closing cost, that kind of thing, but sometimes reserves are required. That's down here on the bottom of the list. But we can use retirement accounts for assets as well. Doesn't mean you have to liquidate them, but if we need to show extra funds, that is always a good thing as well. Any kind of savings is good. Seasoned funds that have been in the bank for greater than 60 days. We don't want to see any large deposits on a bank statement that we cannot source. There are anti-money laundering laws that require us to provide the documented source of where large funds come from. And so, a lot of times people will come in and say, well, I've got, $6,000 at home in a box in my closet. Unfortunately, that is not money that we can use. And so, because we can't document where it came from and can't source it. So, it's important to make sure that you're disclosing all of that to the loan officer so that they know where your assets and down payment and closing costs are coming from. So that we'll go over that a little bit more. Credit score. This is what everyone wonders about. Credit score may affect your rate, definitely affects the rate, your loan credit card approval, housing request, insurance rates. Even insurance companies now take a look at your credit to see where you stand. And so your credit score is very valuable. Make sure that you review them regularly. There is a website, annualcreditreport.com, that you can go on and get your credit. It gives you your credit items, doesn't necessarily give you the actual score, but it allows you to go on there and take a look at the credit items that are on your report. So what's included in your FICO score? Your debt burden. That's a large part of it here that you see. So what are your total debts and obligations? Your payment history is just as important, if not the most important, because that tells us how you handle your debt. Length of history, that equally is important because, if you've had a card for a long time, it's been, it's showing that you've had it for 5 years and you've never had a late payment on it. That's fantastic. Shows good, good credit history. Types of credit. So that's important as well. A lot of times, if someone only has an installment loan, and by that I mean a set monthly payment, for example, a car. If it's $200 a month, it's $200 this month, $200 next month, and so on and so forth. With a credit card, however, the consumer is responsible for how much they charge and how much they pay. And so we like to see different types of credit on a credit report to see how you are handling that. And then, of course, we want to look as well at inquiries on your credit. Have you been shopping around for credit? Do I see a BMW inquiry on there? Because if so, that definitely could affect, if you've opened a new account and it's not yet showing up on the credit report, that could affect your debt ratio, that kind of thing. So we do ask about things like that. So again, credit is very important, plays a big part of it. Again, this shows kind of the breakdown of the last slide, what percentage each thing is, and again, payment history, 35%, and it's that is hugely important because we want to make sure as a lender, we're loaning a lot of money for you to purchase a home. We want to make sure that debt is going to be paid in a timely manner. Credit scores depends on, again, this can affect a lot of things, but this is basically the range of what's considered excellent, good, fair, poor, and very poor. Now, I will say that we do have loans, and I was talking about this with our inspector before we started today, but we can go down pretty low with credit scores. However, you are not going to be getting the very best interest rate and terms of your loan if your score is low. The higher the score, the better the mortgage that you'll be offered. So, do you need a down payment? And Jessica, this is where we get to mention in some of these programs that can help with the down payment. With a VA, a down payment is not required. With a USDA, there is no down payment requirement. So both of those are 100% financing. But we also have what's called the bond program. This is the state of Florida's first-time homebuyer program. Several different bonds to choose from. They each come with differing amounts, but it ranges anywhere from $7,500 to $10,000. And here it goes into that in a little bit more detail. So there are programs out there that you can qualify for. It does require a minimum credit score of 640, and the bond program sets its own interest rates. So it is like I said, it's an offered program through the state of Florida, but it is for first-time home buyers, unless you are a veteran, and then you don't have to be a first-time home buyer, but it allows you some extra money to help cover that down payment. You still have regular closing costs just like you would on any loan, but whatever money that you get can be applied towards both that down payment and those closing costs. So we do have help for first-time home buyers. What's included in your monthly home loan payment? Principal and interest. This is the principal and interest is the amount you borrow plus the interest that the lender is charging for the money. Also include what's called escrows. You'll hear people talk about your escrow account. That is for your property taxes and your homeowner's insurance. So basically you're paying 1/12 for 12 months in the year of your tax bill and your insurance bill. That will be included in your total payment. And that's what's called PITI, principal, interest, taxes, insurance. Mortgage insurance, if you are putting less than 20% down, you are going to have mortgage insurance on that loan. That is money paid by borrowers to insure the loan when you put less than 20% down. So basically mortgage insurance is insurance that protects the lender should you default on the loan. And that, of course, the cost for mortgage insurance varies from loan to loan. So frequently asked questions. What's the difference between interest rate and annual percentage rate? And when you get your documents, it does show two different percentages on there. What an APR is basically, it's a way to show you what the total cost of the loan is with some of the fees factored in. So for example, and I like to share this, an APR is a shopping tool for you to compare two lenders. So let's say that I'm going to offer you a 3% interest rate, and then you go down the road to ABC Bank and they offer you a 3% interest rate. However, what you would want to look at is the APR for both loans, because that factors in what some of the lender fees are that are being charged. So I may have an interest rate of 3%, which is truly what you pay your money back on, is that interest rate. And maybe my APR is 3.125. Check with ABC Bank. They may, again, offer the same interest rate, but their APR is 3.75. That's an indicator that they're charging you higher fees. It's obviously you can choose which one is the best deal with the lower APR. Again, talks about private mortgage insurance, usually required when you put less than 20% down. We've kind of already gone over that. Discount points. So this is when you lock your interest rate in. You have the ability, if you have extra funds, to buy your interest rate even lower than what the market is offering. Basically what you do is you're going to trade the investor or the lender, you're going to trade them with some prepaid interest up front in the form of a discount point, and they return it with a lower interest rate over the remaining life of the loan. So that's something, again, you can talk with your loan officer when you lock in your rate. But you do have the ability to do that. Right now, rates are so low that, you know, most people are not choosing to do that, but you certainly can. So I do have an online application where you can fill out to get pre-qualified. And I would love to be able to help you guys do that. I will make sure that we share that before we get off of here. I'm not sure if we can share it in the comments. Let me go back.
Melanie, I can't put it in the comments, but if you want to kind of just mention that out loud real quick, or show it on the front page, because obviously for anybody who's listening to the recording.
Yeah, is it? I don't think we have the
I don't think we have your app on there.
Okay. But we do have an online application where you could go to watsonmortgagecorp.com, and you can search for the loan officer that way, pull my web page up, and then apply there if you're interested. I also can do a pre-qualification over the phone. So simply a 10-minute phone call just to collect some of the basic information. It takes probably less than 30 minutes to process it, depending on you know, what types of programs that we're looking for, that kind of thing, and get you pre-qualified. And again, the next step after that is to get the documentation in, and then you're out shopping for a home. So like I said, it's much easier than most people think. So Jose and I are here to help. Happy to help with whatever you guys need. And so appreciate your time on this Saturday morning. Whatever we can do, you know, just reach out. There's both of our email addresses there on the screen. We're happy to do so. All right, Jose, back over to you.
And here we go. Use Ellen Yarckin. Development, a home inspection company. They do a variety of services. Today, she's going to speak specifically on home inspections and what to look at when you're purchasing a home. So, Ellen, go ahead. I'm going to get this started for you.
Okay.
Okay.
All right. How do I click them?
I'll do it.
All right. Hi, my name is Ellen Yarckin, and I'm with Home Inspections by Neal Development Group. We have been in business since 1975 and have done everything from the new hospital in Claremont to hundreds and tens of thousands of home inspections. All of our home inspectors are general contractors or have other licenses. I personally have a home inspector's license, a mold remediation and assessment license, and an underground utility license, as well as a WDO. We also do every kind of inspection that there is. We'll click to the next page. One thing we offer with every home inspection for free is a group of warranties to give the new buyer a peace of mind. So for 90 days after the inspection, pretty much everything is covered in case something, I mean, a lot of times we can go into a house, the air conditioning can be fine, and 2 days later it can break. These warranties cover all that kind of situation. I'll click to the next one. Here's some of our certifications and qualifications. We do every single kind of inspection that there is. Therefore, it's a one-stop shop. You don't have to call 10 people to get home inspections. All right, now I'm going to go into the different kinds of home inspections. A general home inspection gives you an overall view of everything in a home that is good and bad. One of the things that I feel is the most important thing in getting a home inspection is setting realistic expectations for the new buyer. There's very few homes that have nothing wrong with them whatsoever, but most issues can be resolved inexpensively and quickly. Just because there's something that comes up in the home inspection, it shouldn't necessarily mean that the deal is killed. There's very easy fixes for most small problems. Okay, then there are, it depends on what kind of mortgage you get, what kind of inspections you're going to need. Everyone should get a general home inspection. And most people in Florida should get what's called a wind mitigation, which basically tells you the hurricane strength worthiness of a home. The most important part of that is the roof, how the roof is attached to the house, the shape of the roof, the age of the roof, and are there any other hurricane protections on the house. And why this particular inspection is so important is it saves you money. By state law, every insurance company has to give credits for certain things that are found in a wind mitigation report. You may pay a little bit up front, but you're going to save that in the first year in discounts in your insurance. A 4-point inspection, certain mortgages require, and certain insurance companies require, especially for an older home. I know that FHA requires a 4-point, many VA loans require a 4-point, and any home over about 15 years, you're going to want a 4-point inspection because you don't necessarily want the insurance company to see the full inspection report. This is what they need to get inspections. It covers 4 systems, just the air conditioning, the roof, the electrical, and the plumbing. And the least information that you give your insurance company, the better off you are. Just give them what they ask. Don't volunteer any extra information. This is another inspection that, in a regular home inspection, if there's signs of termites, it'll be listed on the inspection report. It's not that we don't look for termites in a general home inspection, because of course we do. We go in the attic, we go into the crawl spaces, and if there's evidence, it's not a termite inspection exactly. It's really a wood destroying organism inspection, which covers any kind of fungi, carpenter bee, termite, anything that may cause an organism to destroy a home. But certain mortgages require a wood destroying organism specifically to get the loan. This septic tank inspection is something that is, first of all, if you have a septic tank in your new home, you want to see if, what condition it's in. If it's a fairly new home, the septic tank hasn't been around that long, most likely it's in good condition. You don't necessarily need this inspection. This inspection is especially important for a home that's been vacant for a while, because the fact that the lines haven't been used for a while, the sediment can harden up along the pipeline. It can work for a couple hours, it can work for a couple days, but you won't be able to tell until you've been in the home a month that there's something wrong with either the drain field or the septic tank. How this inspection works is we come out, we pump out the septic tank, we turn on the water from the house, and we watch how it fills up. Make sure the tank fills up properly. That means the main line from the home is working into the tank. And then we watch how it drains out into the drain field and make sure that the drain field is accepting the water that's coming out of the septic tank and that it doesn't have a lag, because that's one of the things. We don't usually find a problem with the septic tank, but we do find a problem many times with the drain field, and that can be an expensive fix. So it's an important inspection, especially in a home that's been vacant for a while. Also, I believe it's required in a VA loan. Here's another inspection we do. It's a video sewer inspection, which is if there's a problem in the line, we can go through either, most likely we go through either the septic or the toilet, and we can camera the lines to see if there's any issues. if there's any roots growing through, if any of the pipes have collapsed, if things aren't working quite well inside the house, you have low water pressure, or if it's an older home and may have ductile iron pipe or something, this may be something you want to consider. Next, a mobile home tie down. An FHA loan especially requires a mobile home tie down, which is basically showing you how a mobile home or a manufactured home is attached to the ground and to the home. A licensed structural engineer needs to sign off on these reports, and they're required for certain loans. We also do mold testing, and especially now in this environment with COVID and people wanting to make sure that their air quality is good, we can go in and test the air inside your home and make sure that there's no contaminants in the air. Okay, we use special tools to determine when we go through a home to see if there's problems. One of them is a flare gun, which is very interesting. I have 2 slides here that will show you. This is an electrical box on the right that visually, it looks older, but you don't see any problems. In this electrical panel, you can see where that yellow is. Those are hot spots. If you see on the right side, there's a 97.7, that's a temperature degree, and 86.7. When you see a hot spot like that with the flare gun, you don't want to touch that box. There's something wrong with those particular circuit breakers. So that needs to have an electrician check out what the problem is. Here's a home. You know, a lot of times, I hate to say this, but homeowners do things like paint over problems. So in this picture, you see the ceiling as it was, and then when I put the flare gun in it, you see this purple spot. Well, the purple spot means it's colder and wet. So there's a leak in the ceiling that you don't see without the flare gun, which means it could be a leak in the roof. One of the most important kind of inspections we do is new construction. People think when they're building a new home and they get that 1-year warranty that everything is going to be built correctly and they shouldn't have any trouble, and if they do, they have this 1-year warranty. A lot of new builders, the crews right now are difficult to get. It's hard to watch the crews because they're short-staffed, and it's really important for you to see what's underneath the walls because they could work for a year. There's so many things that we have found, from homes being put on the wrong lot to homes having foundations that weren't the right size, didn't have enough windows. We've had homes that we've seen where the framing has been shimmied, or if it's been cut, they've just kind of braced it without replacing it. We've had homes where the windows have been put in upside down. It's amazing the kind of things that we find. Most good builders love having someone come in like us to watch the construction. When they give you a hard time, then that's when you have to worry. I have 4 slides on this that shows all the different phases we do. We'll go through it quickly because I know we're short for time. Phase 2 is for block construction. This shows how the house goes up, where the windows are, how the rebar is put in, and making sure everything is square, making sure the windows are the right size and in the right place. The next slide. This is the pre-drywall inspection, which is very important because this is where the framing is. This is where we see a lot of the problems, is in the framing and in the roof underlayment. It's also electrical and plumbing rough-in, so we can make sure that the wires and the plumbing are put in correctly. And this is the final, pre-final walkthrough, which is the one thing that is probably the least important, because the builder will go through this part with you and you can make a checklist. The other three are way more important than this final one. In the next slide. Here's a couple of big projects that we have done in the area that people are familiar with. We did all the inspections for the new hospital in Claremont. We did Brevard Medical City. We did the Delagio out in DeLand. We did Tilly's Bar and Grill, a property condition assessment report, about 50 or 60 projects, commercial projects on our book at any one time. And that is my presentation. But remember, we offer a warranty on all our work.
And thank you so much. Thank you everyone for your time. I know we went a little bit more than what we were expecting, but I think it was a lot of great information. If you still have questions, you can reach me on my cell phone, 352-792-7914. If you're in the Mount Dora area, you can stop over at the office, 639 North Donnelly Avenue in Mount Dora. We're actually in the downtown area, and I can answer questions for you then.
I'll just go ahead and share my cell number as well. So if you would like to get pre-qualified today, so we can get you started, you can reach me at 352-536-4222.
Thank you
Thank
everyone for your time.
you.
Have a great day. Have a nice weekend.